Good afternoon, and thanks for tuning in to the Channel Final Bell. I'm Alex Makovica on the Rural Radio Network. JJ Lauby with Agri Management Systems based in Loomis joins us today to break down today's market activity. As we round out the day, corn traded about 3 pennies of unchanged on either side. Beans came off their lows to finish 5 cents lower to a penny higher. All 3 wheat pits about 3 to 5 cents lower. Livestock trade, another firmer day for live and feeder cattle, but not as strong as the trade has seen recently. Lean hogs also settling mostly higher. Again, I mentioned JJ Lauby joins us. JJ, thanks so much for your time. We appreciate you hopping on.
You betcha.
All right, let's just start 30,000-foot perspective. Your high-level thoughts on today's trade. What did you see?
High-level thoughts. There really wasn't a whole lot to see, to be honest with you. In the grains, we saw kind of I think maybe some risk on in the new crop contracts, both corn and beans. Especially in the corn, I think, Alex, we're seeing, everybody knows we're going to have 95.5 million acres of corn. That is prospective plantings. Now we start really looking at weather from this point in time forward. The 10-day, the 20-day, both of those forecasts look to be dropping quite a bit of moisture in the Corn Belt. So we'll see. We'll really have to keep an eye on this planting progress situation. If we get behind, obviously if we get behind, we're going to maybe see some potential shifting back to soybeans. Who knows for sure what's going to happen there, but typically when you have a wetter March and April, a lot of times that will continue into the first half of May also. And I know that with the equipment these days, guys can get a lot of crop planted in a hurry. But every day really matters. So we just got to really watch the weather.
Crop progress came out yesterday afternoon. JJ, any numbers sticking out in your mind from that report?
No, absolutely nothing. Maybe just made a tiny bit slower progress than what people were thinking, but look back at all the rain that fell east of us here in Nebraska last week and down there, Arkansas, Tennessee, southern Illinois, Indiana, that part of the country. Really nothing surprising there. I did notice that the wheat conditions dropped to 1 point from last week. And that's going to be something we really need to keep an eye on too, is especially the western winter wheat belt. That really could be a deal here in the future.
Yeah. Well, JJ, let's switch our focus from that wheat back to corn and soybean complexes, specifically corn. New crop, for the most part, outpacing old crop is what we've seen so far today. What numbers are you watching? What's sticking out in your mind? And I guess what picture is that painting for this trade right now?
Well, the numbers that I'm looking at, and I think the trade, especially on the corn, we're looking at those old highs up there, 478, 480 area on the D's corn. I think we're for sure going to try to get back up there, and then it's going to be a matter of planting progress and how this crop's getting in. What the extended forecasts look like, and times have kind of changed here. That first of all, 95.5 million acres of corn. That's a lot of fewer acres of soybeans, but also two things on the corn. A lot of those acres are going to be what we call fringe acres, not the best producing acres anyway. And secondly, there's going to be a lot of corn on corn that typically guys, especially east of Nebraska, I mean, they never go corn on corn. It's a yearly rotation. We're going to see a lot of that. And, does that produce a ton of yield drag? Typically, no. Not on the first year of corn on corn, but we get a little adverse weather, and now all of a sudden the national average yield is nowhere close to what we're using in our projections here. I just think there's a lot of room here for the market to bounce and actually give us an opportunity to make some sales up above our guarantee prices on the crop insurance, and hopefully, put some money in our pockets this year.
JJ, you had mentioned before we came on the air today, soy oil was a positive note in today's on the grain side of things. What did you see on that front? Any sort of news?
Well, kind of what we've been seeing on that soy oil market is typically from November to April, we see a big kind of increase in stocks on the bean oil. This year is different. We've been seeing that number drop consistently. We had the NOPA crush numbers come out this afternoon. Soybean oil stocks were considerably below the estimate. And I would just say that is probably due to the tariffs between us and China. If we can keep that so-called used cooking oil out of the country, that is going to bode very well for the oil market. And, that comes from soybeans. So we're going to keep crushing our beans.
All right. It's a good place to end the first half of this conversation. JJ Lauby with Agri Management Systems based in Loomis is joining us to break down today's market activity. Stick around for the second half of this conversation. We're going to dive into beef exports and imports and what the tariff situation could mean for that. Also dive into cash cattle and the lean hog complex. The Channel Final Bell brought to you by Channel Seed and your local Channel Seed Pro here on the Rural Radio Network. Do remember trading of futures and options involves a risk of loss and may not be suitable to all investors. Stick around. The second half of the Channel Final Bell is right after this on the Rural Radio Network.
When challenging conditions arise, we don't back down. We up our game. Outpacing the competition with innovations fueled by Bayer's R&D, keeping you equipped with an expanded portfolio, elite genetics, and additional local test plots. Channel leads the field, so you can rise above. See how at channel.com/rise. Read and follow pesticide label directions, grain marketing, and other stewardship practices.
Good afternoon. Welcome back to the Channel Final Bell here on the Rural Radio Network. I'm Alex Makovica. JJ Lauby with Agri Management Systems based in Loomis joins us yet again to break down today's market activity. We touched on things like crop progress, JJ, the soybean oil complex with NOPA numbers coming out today, and then looking at the new crop versus old crop situation, especially when it comes to corn. Let's switch our focus now to livestock trade today. On the day, just another firmer day for live and feeder cattle, but not as strong as what we've seen recently, as I mentioned. And you were kind of shaping up this tariff situation. How do you see it, JJ?
Well, Alex, I'm kind of maybe in the opposite camp of some people in these tariffs. If you look back at when the tariffs were announced, April 2nd, April 3rd, actually, for the cattle, we dropped about $14 initially on that news. We've since gained back $7 to $9 of that drop. If we have tariffs on these other countries and we can't import beef and or live cattle, or we can, but it's going to cost more, right? So typically you would think that that's going to reduce the amounts. That should be good for our cattle and beef markets, and we've seen that. We have seen a drop off in the boxes, but they since bounced back up. We might be kind of stagnating here seasonally. I see this morning's cutout number was a little lower on the choice, a little higher on the select. But if we look at the cash markets, particularly on the feeder cattle, those markets never did come down, maybe $2 or $3. You had the feeder futures drop 10 to 12, and out in the sale barns, they dropped a couple. And now we're right back up pushing highs, pushing all-time highs out in the sale barns. The futures markets haven't quite caught up to that yet. I don't know if they will. I know that since last Friday, we've seen a tremendous move. Like I said, $7 to $8, $9 in 3 days. But that's on declining open interest on futures contracts. Now, what that typically means is that's called a short covering rally. All the people, maybe some hedgers even, decided to pull the plug. Short-term fund traders probably sold that tariff news, bought it back up, and I guess today's move is a little muted in comparison. I'm really curious to see what the open interest numbers look like this afternoon. If we're increasing open interest on a rising market, that typically is good. That's bullish. That means people are wanting to come back in and buy this market, run it higher. But then again, you've got to compare that to what's going on in the cash market. A lot of people think we can be steady higher on the fat cattle this week. I don't know about that. I think we might be steady lower this week. Last week's slaughter was lower. This week's slaughter is definitely going to be lower with the holiday. Show lists are getting a little bigger, and I don't know. I'm just worried that we're getting awful close here to a meaningful long-term top. And that being said, if you just look at the numbers, our numbers of cattle, we should continue going higher. We really should. But you and I both know that prices don't stay at record levels forever. There's always something that turns the market, and we don't know what that is right now. But things are just feeling a little toppy in here.
Well, let's round it out with this, JJ. You had touched on the cash market. It's kind of at a downfall lately. When do you see that maybe potentially coming to a halt? What will it take to turn it around, do you think?
I think ultimately it's going to take higher beef prices. The packers have been operating in the red for quite some time, and no business wants to lose money. At some point, they're gonna really slow down the chain speeds, and we'll see if that correlates to a rise in the boxes, or if the American consumer has just kind of had enough of high-priced beef.
All right, let's round it out with lean hogs ahead of the Easter holiday, seeing just a tiny bit of strength. But anything in store for those lean hog complexes, JJ?
I really think third and fourth quarter hog prices should get, third quarter in particular, should really see a big boost. When the latest Hogs and Pigs report was really pretty friendly. They also made some adjustments to the last Hogs and Pigs report, cutting numbers again. How the USDA can do that, I just don't know. But hogs really should, longer term, should be supported here.
All right, that's JJ Lauby joining us of Agri Management Systems based in Loomis, Nebraska for today's Channel Final Bell. You can contact JJ and his team at 308-995-2235. The Channel Final Bell brought to you by Channel Seed and your local Channel Seed Pro. Do remember, trading of futures does involve a risk of loss and may not be suitable to all investors. I'm Alex Makovica on the Rural Radio Network.